Good evening, dear students. So sorry for late, but I have some business to do with the presentations. So I hope you can hear me well. Just let me know, please. Okay, thank you that you can hear me well, that we can start the class. So today we have new topics based on accounting skills and the financial management, which is about the inventory, stock costing methods, and we're going to study about the cash flow statement and how to prepare and interpret the cash flow statement. So before to start the topics, I would like to share with you about our finance classes structures. That's what we have done actually. Let's see first. So today is the class number 8. So we have done some chapters on the accounting skills, which is accounting equation, accounting concepts, right? We have done some practical exercise based on it. As well, we have done the balance sheet income statement, some definition of accounts. What else we have done? The depreciation methods we have done, right? We have some practical exercise as well. And the class number 8 today, we are going to study about the stock costing methods and the cash flow statement. As well, we have some practical exercises if you would have a time. And the next class would be based on, firstly, would like to share with you, would be based on practical exercises on homework assignment number 6. We'll have a discussion on it. And the homework assignment number 7, which is I'm going to give you today. So the next class would be hopefully fully based on practical exercises. And we have another chapter 4 on the financial management, which is accounting for limited companies. This is small presentations. It's very easy, only theory is inside of. The next one, we have some. The next after the class number 8, we have some topics, which is totally based on the financial management. So we already would complete the accounting skills. Then we will start the managing the finance. We start to manage the finance by the ratios, and we are going to study about analysis based on the ratios, and another kind of analysis, which is horizontal trend and vertical cost. So we are going to have a study about the topic, which is about the capital expense decision, how to make decisions on the capital expenditure, about different methods that we can make calculations to find our returns, like a payback methods, account rate of return, discount cash flow techniques, which is net present value, and IRR, which is internal rate of return. All these topics is based on the financial management. As well, we would have some topic which is based on the performance evaluation, behavioral consideration, management accounting decisions, which is based on the return on investment and residual income and economic value added, how to make calculation based on these methods. And the last topic would be based on the decision making and the condition of risk and uncertainty. We would see another kind of strategies where we can use in the financial management, like conservative approach, like the 3-point estimate approach, like what is about the sensitivity analysis, how to make a sensitivity analysis based on our financial statements, and so on. So approximately it's around totaling 13 of classes. But actually our program, by your MBA program, we have only 10 classes on the MBA course. I mean on the finance classes and the financial management. So additional 3.1, which is why we have done additional 3.1, because we have some practical exercise we are spending more time for the practical exercise, but that is like, I'm okay with that, and that would help you as well to have your exams and to pass your exams actually. And that's why I'm talking about right now about our finance class structure, because we need some additional classes, and I'm offering to you to have some additional classes within the week, next or after the next one. If you are eager with that, I can manage with administration that we can, besides of the finance class on Friday, we would have some additional class. But I'm not sure which date is possible, that I have to manage with the administration first. Today the class is number 8. And we spend a lot of time for our accounting skills. And after the class number 8, after today's topics, we would have the topics which is totally under financial management. But we need accounting skills topics as well to know, to interpret all the financial statements, because that would help us to understand the financial management better. That is a part of the financial management actually. So just right now I'm offering you to have some additional classes that we should have it. And let's see when it's possible. I would manage it with the administration, then we'll let you know before 3-4 days. I will try to do so. Okay? That's what just about our structures. So about homework assignment number 6, that I have received some of your papers, and the discussion would be on the next Friday, right? That I was giving you 2 weeks to complete your answers. So today we have a new talk. Let's start them. So any questions on the structure that I explained you? Because we have we will have the exam and the finals, which would be in May, and we have to complete all our classes, including the exams, in May, before the June starts. I will send you the structure, the after class, okay, that you have that finance structure, but that I already made some changes and corrections. The news will be sent you later. Okay, so today topic of under inventories, we are going to study about the stock costing methods. So this is very important when you prepare the financial statements as a balance sheet. So structure of the topic would be introduction. We're going to introduce the inventory to identify what's in inventories. We have some classification of inventories as well. We would try to calculate the inventory to get the formulas so we can find the inventories at the end of the period. Stock costing methods, which is inventory valuation as well. This is the same things that we are going to study about 3 main costing methods, which is FIFO, LIFO, and average costing method. And we have some examples based on those methods. So what is actually inventory? Or sometimes we call it stocks, like inventory. The USA, they mostly use in their financial statements the word inventory. But you can meet, you can face the balance sheet with the words of inventories or the words with the stocks. Like this is all the goods or the materials that the company have in the store or the factory. For example, stores like shop, the store owner or shop owner, they need to know to identify how many number of items of their goods like they have in the shelves, right? Because the demand must be satisfied by the customer needs, right? And we have to order and control it. The factory managers need to know how many units of their products available for the customer orders as well. And for example, as the restaurant, they as well need to know how many more food they, based on the current supplies of the menu, their needs. So this is why all the companies or factories or any kind of organization, they have inventories or stocks in their stores. So to be in satisfaction of the customers' needs, to able to sell that amount of the products, of the goods or services that customer will need in the future, right? So we have some classification of inventories. So they classified as the raw materials. You know, the raw materials, like for example, at the factories, like let's say we have some furniture factory. They produce the furniture. They have some raw materials like wood, like iron. So this is all the raw materials. And where is the raw materials charged? The process remains unused at the end of the period. At the time the process account is being balanced, it forms as a part of the closing inventory for that process. That means, for example, based on our example that the furniture factory, when the furniture, the factory is selling the products, at the end of the period, they must prepare the statements, income state, like balance sheet, all the financial statements, and to calculate, to have a number of items, how many raw materials, how much based on the production they have it at the moment, right? And if of course, like a big companies like a furniture factory, they have some inventory. The inventory would be left at the end of the period, and these inventories must be valued and reflected in the balance sheet, because this is the company's assets, which is called the current assets. So we have as well some inventories, which is called work in progress, where the processing of the input introduced into the process but not complete at the time the process account is being balanced. So the partially complete production would be from the work in progress. That is all those goods which is not completed yet for the sales, okay, that is left in the stores. This is work in progress. So we are leaving this work in progress, these inventories in our company, and we assume that in the future we are going to complete it and to proceed for output, which means to sell it for our customers. This is work in progress, like the not finished products. Next one, we have some finished stock, we call it. By the finished stock in relation to the process, we mean that the output of the process, that means it's already finished products, already those goods which can be used and which is being prepared for the sales, and they are actually transferred by the final product. This is the finished stocks. So we have three main classification of inventories, which is raw materials, work in progress, and the finished stock. So how to make calculation of inventories at the end of the period? Because at every organization, every entity, they do the statement at the end of the period, at the end of the year, right? And we have to make calculation all of our assets that we have in the company, in our stores or factories. So we should make calculation of our inventories because they are part of the balance sheet. They are our short-term assets, which have liquidity, right? After the cash, after some debtors, they have the medium liquidity in the short-term assets. So, and to define how much inventory we have in our stores, we use this following formula. Let me show you first, like inventory calculation, how to find our inventory. So we're taking the beginning inventory that we have at the beginning of the year, adding the new inventory purchases, which is we have made purchase, for example, during the year. That could be a different number of purchases from 1 to more than 8. And we deducting from our cost of inventory sold, that which means how many inventory sold during the year. And after that, we can find our inventory at the ending of the year. And this inventory goes to our balance sheet, would be reflected in the balance sheet. Okay? And very important question is how to value our inventories. Because first of all, we mean company or the factory buy inventories, purchase some like raw materials, like some or goods that we can buy at different price, right? When we do a many purchase, if we have a few different suppliers, the price that buy inventories could differ. And the question is how to value our inventory, at which price actually in our balance sheet. That is very important. So I have some methods to show you how we can make calculation of our inventories. As well, I have some examples for you to show it. That would be more simply to understand. So the way in which we derive the cost of stock is important in the calculation of profit and the presentation of financial position. That means we have 3 kinds of methods how to value our inventories. The first method called FIFO, first in, first out method. Maybe you have heard about this. The next one, LIFO, last in, first out method. And the third is average method. So based on these 3 methods, the companies mostly they choose the ones and try to interpret in the calculations, and based on which kind of method you choose, it will reflect your profit after in the income statement, as well the company's financial position. So why is it very important to find the right method for your particular company? So the difference between these 3 inventory methods is in the way the cost of goods sold is calculated. So as I told you before, that how to value our inventories at the end of the year is very important. At which price we can value if we have made a few kind of purchases during the year, right? So this is the valuation of inventory is called the cost of goods sold. That we're going to calculate our stock costings, the costing of our stocks, how much they cost actually. So here is example. The example 1 is very simple to show you when we use a different three kind of methods, what the results would be. So imagine a company buys 2 gallons of milk, each at different prices, then sells one to a customers. Okay? So the company buys the 2, sells 1, and then we have left 1 gallon of milk in the store, right? So we have made purchases. Let's see. In the January 3rd, we have bought 1 milk at 1 gallon of milk at the price of $1.50. At January 7th, we have bought 1 gallon of milk at the price of $2, right? So that means we have made 2 different purchases at the different prices. So to find our cost of goods sold, we can use the 3 methods and to see difference in the results, in the prices actually. So by the FIFO method, which is first in, first out, the price would be $1.50. Why? What is the means first in, first out? That means the first inventories comes into the store would be first sold. Okay, which is the first comes, like first sold. Like in our examples, that the first inventories of the milks comes at the January 3rd, right, at the price of $1.50. So, and we do calculation of our cost of goods sold by this price, which is by the first price, which is $1.50. So you just remember that this would be very easy to remember because of the alphabet by the FIFO, which means F first in and FO first out. The first inventory comes into the store would be first sold, and that price would be taken as to value our inventories, to value of the cost of goods sold. And next one, the method is LIFO, which says the last in, first out, which means the last inventories which comes into the store would be sold firstly. Like in our example, the last inventories comes at the January 7th, right, at the price of $2. So, and we do calculation of the cost of goods sold by the $2. That means we sell the last inventory, the oldest inventories firstly, which is LIFO method, by the LIFO method. Another one is the average cost method. By the average cost method, we are taking the average prices of 2 purchases. Like here is the first purchase, the price was $1.50. We add the price from the second purchase, which is the $2, and divide by 2. Just average, which we are making calculation and getting the average figure from 2 prices. So, and it's been $1.75. So this is the 3 we have. So right now we have found our cost of goods sold by the 3 different methods that we use to value the company's inventories. Okay. So, and I have some explanations, and which is explain what kind of advantage and disadvantage we have of each method. And we have another example, which would be more complicated. So firstly, you have to clearly understand this example, then we can move for the next one. So let me see your questions at the box chat. Okay, some of you asking me where we can find the average cost. This is like based on the mass average calculations. When you would like to find the average figure from the different kind of prices pieces, just take $1.50, add it $2, and all would be divided on two pieces, two items like we have, right? Two items of the purchases. So, and we derive the $1.75, which is the price of average costing methods. Just calculations here is. Yeah, that's some of you giving me like FIFO plus LIFO and divide on 2. This is the average one. But when the companies use the one method only, they won't do calculation first by FIFO, then one LIFO. They just taking the average prices and making the calculation based on the average means. So this example seems like a simple one, it's clear, right? The next one would be more complicated. That how these companies would work actually. Let me show you first. So example 2. This is as well. This is the example based on the 3 kind of stock costing methods, but with a different identification, with a different sample. So here is the Cindy Shepherd runs a candy shop. Cindy Shepherd, the woman's girl or woman's name, sorry, woman names. So Cindy Shepherd runs a candy shop. She enters into the following transaction during July. So at the July 1st, she purchases 1,200 lollipops at $1 at each. Okay. At the July 13th, she purchases 500 lollipops at $1.20 at each. And at July 14th, she sells 700 lollipops at the $2 each one. First of all, now, how many lollipops does she have at the end of the month? We should make a calculation to find how many inventories we have at the end of the period, right? So the answer here is from first purchase 1,200 plus the second purchase, which is the 500, and minus 700, which is the sales. So we have a 1,000 of lollipops of inventories at the end of the period. So let's say at the end of the July. Now there are 3 ways we can value our inventories, which is lollipops, right? Let's see. So this, I do hope you do understand the assignment itself. Okay, next move. So what about the FIFO? Some little words about the FIFO wants to tell you. It's very common to use the FIFO method if one trades in foodstuffs and other goods that have limited shelf life, because all these goods need to be sold before they pass their sell-by date. This is all the concerns the companies which sell the food, right? Because they have some expiration dates, right? Like milk, for example, then, or the eggs, or something else the fresh foods. And thus, the first in, first out method, which is the FIFO method, is probably the most commonly used method in the small businesses. So let's see the calculation based on our assignment of the lollipops candy shop. So the FIFO method. This method assumes that the first inventories bought, which is the first is bought, will be the first one which is sold, right? And that inventories bought later are sold later. That the first we buy, first we sell, and which is the last we have bought, we later would be sold, right? The value of our closing inventories in this example would be as follows. So let's see calculation of the lollipops of the inventories. So at the 1st July, you remember Miss Shepherd, she has bought the 1,200 lollipops at the $1 of each. So here is the numbers of the lollipops, 1,200, and how many of the price of the units by the unit is a $1. So the total would be $1,200. The next purchase was at the July of 13. She bought 500 lollipops at the $1.20. And here is at the $1 each one. So here is the calculation that she bought the 500 of the lollipops by the price of $1.20, and it's totaling in result 600, right? And two purchases contains 1,800 of the dollars, which is contains 1,700 of lollipops, which is in units, right? Then at the July 14, she sold 700 lollipops, which is at the $2 each one. So here is, please take your attention. So she sells 700. By the FIFO method, we must sell our inventories, which is first comes. You remember, the first comes first would be sold, right? So that means these 700 lollipops will be taken for the sale, I mean, from the inventories, which is first on 1,200, right? And at the balance, we have 500 left from the first purchases, which was bought at the price of $1 each one, and totally in value 500 US dollars, right? And then we have as well which is left inventories from the second purchases, which is 500, remains same at the $1.20 and valued by the $600. So at the end of the month, we have inventories in units, which is 1,000 of lollipops, right? And which is valued at the 1,100 US dollars. Why is like this? Because we are taking would be the totaling of the two purchases, like the first purchases inventory is left, which is, and plus the second purchase inventory is left. So you will get the total values of inventories by the 1,100. So using the first out method, FIFO method, our closing inventory comes to 1,100 US dollars, and this equates to a cost of $1.10 per lollipop. Just take values and divide on the units. You will get the price for each lollipop for the inventories. So, any question based on him by the FIFO? So we have just wanna conclude the first method. You remember Miss Shepherd? She made two purchases. by the units first with 1,200 lollipops, and the second purchases by the lollipops of the 500 units, right? Then she sells 700 of lollipops, right? So when she is going to sell the 700 lollipops, she must take this, if she used the FIFO method, she must take these lollipops from the first purchases, from the first inventories, we call it, and deduct it, and then we have got some balance after the first one, which is left 500. And the second purchases remains, the second inventories remain at the same price, at the same values. Okay? So at the end, we can make a calculation of totaling values of inventories. This is the FIFO method. So she buys Miss Shepherd. She buys lollipops partly, which means the first she buys 1,200, and by the second purchase she buys 500 only. Then she sells 700 only. So you must take a deduction from the total inventories, and we have left some 1,000 of units, right? And she must always take. She must take the lollipops for the selling from the first of purchases, if she used the FIFO method. So where is not clear, just let me know, please. Okay. Okay. Sorry. I got what you didn't understand. Okay. Let me highlight you. So this here is the first one, 500 of the lollipops is left from the first inventories, because 1,200 minus 700, which is the sales, we have got the balance 500, right? And these 500 units of the lollipops would be valued at the $1 of each, right? And we have got the 500 US dollars. And second one, we have a left 500 of lollipops from the second purchases. Here is the second purchases, because this is not sold yet. This is not sold yet. This would be sold in the future. You remember, this is the finished stocks. The lollipops, which is inventories, which is the Miss Shepherd keeps in the shop. She's planning to sell it in the next month. So this is called inventories. And the second inventories remain same, because the sales of the 700 was enough taken from the first purchases. In the units. And of course, as we have been, the second purchase remains. It would be in units of 500. It would be valued at the same price which was bought, at the $1.20, and which is valued at the 600, which is 500 multiplied on $1.20. You will get the $600, right? Then totaling of this is 500 plus 600. This is inventories in values, in the money. That would be totaling by the 1,100 of US dollars. And how many units we have? We have 1,000 units left, right? This is 1,000 of lollipops, which is the candy shop's inventories, which is left at the end of the month. So here is that's what. And the important thing here is to get the price, to get the cost of goods, cost of inventories left. To find its cost, we are taking the 1,100 of the values of the the inventories. Here is the formula. We divide on the units, the numbers, which is 1,000, and then we can get the cost of the inventories per lollipop at the end of the month, which is $1.10. Sorry, $1.10. And this amount, which is 1,100 US dollars, would be reflected in the balance sheet. If the Miss Shepherd going to prepare the balance sheet at the end of the July, she wants to see how many inventories and the cash or assets she has at the moment. She can do it, and the inventories would be valued by the 1,100 US dollars. So this is what about the FIFO method I would like to say. And this is very easy example. Sometimes you can see that the big, the large, or even the small common, they have a lot of purchases during the year at the different prices. So they do all this calculation to find how the inventories values at the end of the year. So you can imagine how many calculations would be done. So let's see the next method, the LIFO. How we can make calculation of inventories by the LIFO method, okay? I think this is clear. Some of you say that they do answer, some of you not yet. So, but I'm going to move because we have a limited time. So LIFO method. This method assumes that the last inventory is bought are the first ones to be sold. So, and that inventories bought first are sold last. This says that, so the last inventory must be sold firstly, and which is the oldest inventory would be sold later, I mean. So the value of our closing inventories is in here is calculation we have on the candy shop. Let's see, by the LIFO method. So that means the here is firstly I would like to say that Miss Shepherd, she is selling the 700 of lollipops, right? But if she used the LIFO method to value her inventories, she must sell the 700 lollipops and take these units from the second purchases, which is the oldest purchases, to sell it from the second purchases. If the second purchase would be not enough, should be taken from the first one. Let me see first. Like here is the purchases are 1,200 lollipops at the first each. Was bought by the $1 of each. Yes, right. So value here is we have a 1,200. The purchases of the second purchase was by the units of 500 of lollipops, and which has bought by the $1.20. Here is 500 times $1.20. You will get the 600 of values of inventories. So totaling our inventories before the 14th of July, we have in the values would be 1,800, right? And of the units of the lollipops is the 1,700. So then the Miss Shepherd, she sells the 700 lollipops at the $2 each, right? So here is we left, and then would be left of the inventories, which is lollipops, 1,000. This is the formula is here is. Just let me show you. Here is. They didn't show you formula. I want to show you. So you have to take your total numbers of 1,700 minus your sales, which is 700. Then you will get 1,000 of lollipops, right? Of units, of lollipops, and here is. This is and then this is the 1,000 of inventories which is left at the end of the month. So, and they will be valued by the $1 each. So we have 1,000 here is. Here is no more. So, explanation here. Now we have same two kind of purchase, right? Now we are selling the 700. This 700, firstly, the 700 of lollipops must be taken from the second purchases, right? Where is it? 500 only. That means 700 minus 500 will get 200 of units, which is must be taken from the first purchases, like this. So we sell the we sell the lollipops starting from the second purchases, 500. Then we left another 200, which is must be sold, right? And those 200 were taken from the first purchases. And then we have got the 1,000 inventories, which is left from the first purchases, and which would be valued at the $1. And the second purchase, we have no any inventory, right? Because the 500 will already have been taken for the selling. And at the end of the period, we have the lollipops in the units of 1,000, and which would be valued by the 1,000 of US dollars. And to find the price of this unit, just take your values, divide on the numbers, you will get the price per lollipops at the end of the period. And this 1,000 of values of the inventories will be reflected in the balance sheet if we use LIFO method. The LIFO method is commonly used in the USA. The other countries, they mostly use the FIFO or the average costing methods. So, any questions so far? So, first I want to type for you first. So, if we are we plan to sell the 700 of lollipops, we must deduct from the last purchase, which is the second purchase, right? But in the second purchase, we have only 500 of lollipops. It's not enough for sales, right? By the way, we do deduction, and we'll get 200 of units, which is would be deducted from the second purchases, or sorry, from the first purchases. Let me do it correctly. I think maybe you confuse. Yeah, sometimes it's confusing that would be. And then we are taking the 200 of the lollipops from the first purchase. Here is just typing for you. 1,000 of units of lollipops, let's say, left at the end of the month. Here is. So first, I was just right now, I have sent you the calculations of the inventories. I mean, how we do sell how we are, where we checking the inventories. Firstly, first we're taking we must take the 700 lollipops and sell it, right? We're taking we must get these 700 of lollipops from the second purchases. But in the second purchase, we have only 500 of lollipops. By the way, we do deduction. We're taking these 500 lollipops and another 200, which is for selling. We are going to get it from the first purchases. And then we left only 1,000 of the lollipops. So, and if you do understand, just let me know. Here is like the method says that the last inventories must be sold firstly. Then, if you have no enough inventories for selling, you are taking from the earliest one, which is we have here is from the July 1st one. Okay, that's clear, right? So let's see the next one. We have another average costing method. So let me show you. So what a little explanation about the weighted average cost method. It's most commonly used in the manufacturing businesses where the inventories are filled or mixed together and cannot be differentiated, such as chemicals or oils or another kind of raw materials. Because of, for example, the chemicals they bought 2 months, for example, the chemical which is bought 2 months ago cannot be differentiated from those which is bought yesterday, because they are all mixed together like in one balloons or in one cans. So why the average cost method is used in the manufacturing. But it's not like rules that only in manufacturing the other the companies which is with a different kind of service or production can be used this method. Each company will decide which method is the best for them. So here is we have a calculation based on the average costing method. So let's see them. Same, we have you remember the purchases. First purchase is 1,200 of lollipops at the $1 each in the values of 1,200 US dollars. Second purchase is the 500 of lollipops at the price of $1.20 and valued at the 1,200 US dollars. Sorry. And here is at the totaling we have of the numbers is 1,700, right? Here is 1,700 of the number units, and which is values by the 1,800 US dollars. So therefore, the average cost per lollipop is we have to take our values, which is 1,800, the values of the two kind of purchases, and divide on our total units of the lollipops, and then we will get the price per lollipop, which is $1.06, right? And then make sure she sells the 700 of lollipops by the $2 each one. Yes, that we know by the assignment one. So we just like the calculation, you must take 1,700 of lollipops, the total of inventories, minus or deduct it from your selling units, which is 700, and you will get the balance, which is the 1,000 of the lollipops. And this 1,000 must be valued at the average price, which is the $1.06. And values of our inventories at the end of the month would be 1,059 US dollars. Yes, right. This is so you do understand, right? Here is, let me show you something. Just I wanna, like, here is we check our 1,700. Sorry, deducted from the selling units 700, and we will get this our balance of units, which is 1,000. Oh, I'm sorry. Here is 7. And we have got our balance, which is we left inventories. The left inventories in the candy shop of 1,000 of lollipops, and by the price which be valued at the average price, which is the 1,006 cents. Oh my gosh, sorry, this is so here is. So, and using this average costing methods, the inventory amounts would be 1,059 US dollars, and these amounts would be reflected in the balance sheet. And that means we have found our average price for the each lollipops, which is $1.06, right? Just by this calculation, let me show you. Here is, I have a, so that must be clear. Here is. So this is all the simple calculation. In the average is mostly simple calculation in the average costing methods. You'll have to check just average the prices of the lollipops, and that's all. And you would find your inventory's values at the end of the month. So okay, that's very good that you do understand. I think so. So some of you ask me, where do the 1,059 come? This is the calculation. 1,000 of the lollipops, which is left inventories, you must multiply on the $1.06. Then you will get 1,060. It's just rounded. Here is. Okay, I think that is rounded. Just sorry, let me see first. Sometimes in the project side they round the figures, that you might be confused where it comes. It's like around it. It's $1,060 almost. Okay, that's maybe not 59. Just don't worry about this. This is for $1 here, $1 there. But of course, it's very important when you have a large unit and when you have a very expensive goods. You must do care about each of cents, right? But this is just a project size to illustrate you the calculations. That's what I want to see. So here is, any questions so far about the average method? Is it clear for you? It's the simplest one, I think. I mean, amongst of the 3 kind of cost methods. So some of you say, man, that is it the average method is the usage of FIFO and LIFO together? No, this is not the together. This is the average costing methods, which means we are making calculation and finding the values of inventories by the average price of purchases if we have a few amounts of purchases during the period. Okay, this is average figure which is derived from the prices, because each purchase can be bought by the different prices at the different price, right? So, as I told you, the first one, FIFO method, first in, first out, usage in the most of countries, in most of companies. It's logically like maybe the best one, because as we have told already, that the first inventories would be first sold. So if we have some expiration dates of the inventories, the better if we are going to sell those inventories which comes the earliest in the stories, right? But for example, in the USA, they use the LIFO method. They have own system that they use LIFO method. And some companies as well, they using average method. And as I know, for example, by the accounting standards, they would have some argues about these methods. Some say that the best one use the one method for all the countries. I mean, as the accounting standards, to make a one method to value the inventories, like FIFO. But in this regard, the US says that they don't want to change the system of valuation inventory. They are actually offering to use the LIFO and make a LIFO method as an accounting standard for all the countries, for all the world. So that's all what I want to tell you and teach you about the stock costing methods. That's very important when you do prepare the balance sheet, and because the inventories actually, when we do prepare the balance sheet, they would increase our assets or decrease based on which kind of methods we are using, right? Because at the FIFO, for example, between the FIFO and LIFO, the difference in the price would be big one. I mean, the difference would be spread and which method would be used in your company or by your company, that depends on you. Would you like to increase your net income? Then the better is the usage of the FIFO method. Would you like to decrease your net income? You can use the FIFO method, because in the LIFO method, because the LIFO method, when the loss is sold, that means the price would be different, right? Want to show you something. Okay. Sorry. If, for example, when companies prepare the income statement, if they would like to reduce the net incomes, the best way if they use the FIFO method. And that also would be good for company, because when they reduce the net income by the inventories, I mean by the inventories methods, they would pay the less taxes, right? But when the company wants to increase the net income, in the case of they would going to submit their financial statement to the banks to get some credits or loans, and to show their financial position with the high net incomes, they use the LIFO method, right? So this depends on what you want to how you would use your method in which of case. So that's all about the costing methods. So any questions so far? Did you get the costing methods? How we could make calculations? The first example was the simplest one, right? The example one here is. This is just illustrating you at what price you should cost your inventories when you use different kind of methods. But the second is more complicated because at the second we have a few kind of purchases and we have some selling as well, the sales as well, I mean. So that's all for stock costing methods. We have completed these topics. And now we are going to move for the next one topic, which is called the cash flow statement. So, and under cash flow statement, you would have homework assignment. I won't give you the assignment on the stock costing methods, would be given you later. Okay? So let me show you cash flow statement here is. So a complete description of firm's financial activities during a year consists of three basic financial statements. That we know that all the companies they actually prepare the three kinds of financial statements at the end of the year, right? Which is an income statement that we've done already. We know how to interpret and prepare the income statements. And we know that the income statement shows the activities as measured by the revenues and the expenses of the company throughout the period, right? In the income statement, the company shows how many expenses they made during the year, what kind of sales they got during the year. What about the balance sheet? As well, you know what is the balance sheet, right? We have done some practice exercises. You can interpret the balance sheet and its items, right? And the balance sheet provides a snapshot of what the company owns and what is owed, right? And the third statement is very important as well. It's called the statement of cash flows. So it lists the sources and uses of cash that result throughout the period. So the statement of cash flows describes the underlying transaction that caused the cash and the cash equivalents. So in the cash flow statement, we show the flows of our cash in the company. So only about the cash concerns, which is made expenses or have got some revenues or earnings by the cash. Okay, let me show you. Next one, here it. As well, the cash flow statement or report of flows of cash, it shows the cash in, the cash flow in, which means the cash comes into the company's accounts, and cash out, which shows that the company made some expenditure or made some prepayments or payments by the cash. So as well as the rest of financial statement, the cash flow statement is a measure during a specified period of time. We prepare the cash flow statement at a specific date. So, and you have to know and remember that the cash flow statement, it shows only the flows, which comes into and out of the company of the cash only. So in the cash flow statement, we won't show how much income we have, how much total expenses the company made during the year. We show all these amounts. We show only the cash flows, which comes out and comes in of the company. So the measurement of cash flow can be used for calculating other parameters that give information on the company's value and situation. This is said that the companies use the cash flow statement to make calculation for the for the following situation, just wanna explain you for which one. So firstly, to determine a project's rate of return or value. So about how to determine some project or investments, the rate of return or its values, we're going to study in the future topics. So, but in this kind of calculation, we use the cash flow statement. And the time of cash flows into and out of the project used as inputs in financial modes such as internal rate of return and net present value. So you remember, as I previously have presented you the financial class structure, we have some topics under financial management where we have some strategies and methods how to make decisions, investment decisions, at which kind of strategies and methods we can make calculations, how much values we will be returned. This is like we use in those situations we will be used the cash flow statement. And before the start the new topics, we have to interpret and understand what is the cash flow statement itself. So as well, to determine the problem with the business liquidity. So this is the very important, that the cash flow statement shows how the company liquidity at the period. And as well, it's very important that it shows the company's profitability, its financial positions, how many cash or assets in the cash the company owes at the moment. Because here is the very interesting statement, which is as well important, which say that the being profitable does not necessarily mean the being liquid. So a company can fail because of shortage of cash even while profitable. That means the company which is have a positive net incomes, which can be said that is profitable. We cannot say that the company's financial position it's a good if it has not enough cash on the hand or in the bank accounts, let's say. Okay. This is because mostly happens with the financial institutions like banks. You know, when the banks will be bankrupt, goes for liquidity. Why they do so? Because they can be called as the profitable banks, but besides of they have not enough cash in their account, their own cash, they could be fail. Could be bankrupt in the future. Because the banks, what they do, the financial institutions, they borrow money. I mean, they not borrow money. They get the money from the people, which is would be reflected in deposits, right? And those money they borrow for the other entities, the companies, or as well for the people's one. They have no any own cash money. I mean, that's own capital money. And sometimes they can use their own capital to borrow for another entities, some additional one. I mean, your borrowing status will be increased, and your liquidity will be decreased. You have no enough cash to pay for your liabilities, right? And this is very important when we prepare the cash flow statement. The cash flow statement shows the true story of the company. I mean, true face of the company by the liquidity. The next one, as well, the cash flow statement shows that as one alternative measure of a business profits, when it's believed that the accrual accounting, that concept do not represent the economic realities. That means the cash flow statement shows the real situation of any kind of entity, besides of accrual accounting concepts, when we can see the cash flow statement. So it's very important when you do, for example, when you would like to have some partners, you can require to see the financial statements, as like they can show you the income statement, they have enough on net incomes, as well the balance sheet, as well you have to see their cash flow statement. This is very important because this statement shows the company's real profitability, its liquidity. At the moment, it's liquidity, okay? And why? Because, for example, a company may be nationally profitable but generate little operation cash, as may be the case for a company that barters its products rather than selling them for cash. This is like, you know, the company which is not selling the products by the cash, they can barter to change for another kind of products. And for this kind of companies, their liquidity very low because they have not enough cash on their hand or in their accounts. But this kind of companies, they can get additional cash by issuing their shares or getting some additional debt finance, which is like getting some additional credits or something else like this. So let's see the next one. As well, cash flow can be used to evaluate the quality of income generated by the accrual accounting. When net income is composed of large non-cash items, it is considered low quality. That means when you do prepare your income statement, if you in your income statement most of the monies, you remember about accruals, prepayments. When we are like in the income statement, we can reflect our revenues, which is already sold, but the payment we haven't get in the accounts. And the cash flow statement shows like real like profitable income of the companies, because it shows only the cash which was already in the company, which all those payments which is made by the cash, and not those payments which would be made in the futures, like prepayments. As well, to evaluate the risk within the financial product, matching the cash required, evaluating the default risk and reinvestment requirement. That says that we use the cash flow statement to evaluate our default risk, which means to evaluate our the bankruptcy risk if we have so. Or if we need some reinvestment in the future, we need to know how many cash we have at the hand actually, how many capital we have to make a new investments and to contribute for the new projects, right? So this is the cash flow statement, why it's important. Okay, here is this statement. I would like to explain you. When the net income is composed of the large non-cash item, it is considered for low quality, which means low quality of the financial position of the company. That means when you, for example, you sell the products, right? And if you receive your payments by non-cash items, like by another kind of products, you make a barter changes, or it's like would be paid in the future after a few months or after a few weeks. This means which is non-cash items, you have not yet payment, you have not made get the payment for your products, and it's not reflected in the cash. In this situation, we can say if the company really shows that you have high income, but this income is not guaranteed by the cash money. It says that this company's financial positions, the quality is low. the quality of the financial position of the company is very low. Because if you didn't get your payments that you should get, that then if you have a risk in the future, you might won't get these payments, and a different situation could be, right? So this is why it says that the low quality of the company's financial positions. If your all the incomes reflect in the non-cash items, in the non-cash actually payments like this. So let's see next one. So the total net cash flow is the. So what is the actual cash flow statement? We have the cash flow statement. We do prepare the cash flow statement. It would be separated by the three parts. First one called the operational cash flow, and the second investment cash flows, and the financing cash flows. So, and the total cash flows would include these three kind of parts of cash flows. Let me explain you each of one. So the operational cash flows is the cash which is received or expended as a result of the company's business activities, which is the main business activities. It includes the cash earnings plus the change to working capital. And it should be actually in positive amount if the company have got some income, right? So operational cash flows, this is the flows of the cash which is derived from the business activities, which is the main of business activities of the company. Like we sell, like candy shop, we sell lollipops. We have received some the revenue from the lollipops, right? And this revenue from lollipops comes under operation cash flows. Of course, if it paid by the cash, if customers pay by the cash, it comes on the cash flow statements and under operation cash flows part. The next one is the investment cash flows. The cash received from the sale of the long life assets or spent on capital expenditure. Like this is all the cash which comes from some kind of project or investments, some acquisitions or long life assets. Long life assets, this is some kind of fixed assets we call it. This is investment cash flow. For example, if we contribute our money to new kind of project or investment to buy some new equipment. So, and if we will get some in the future some earnings, a profit from these assets or investments, and this flow cash of the profits comes on the investment cash flows part. Next one, the financing cash flows. This is the cash which is received from the issue of debt and equity or paid out as dividends and share repurchase or debt prepayments. Like, for example, the company wants to issue the shares, new shares, and the money, if it's money paid by the cash for those shares, when it comes into the company's accounts, it comes on the financial cash flow parts. Or when we pay, like we are a company and we are going to pay the dividends to the shareholders in the cash, and as well, this cash outflow comes on the financial cash flows. On the financial cash flows part. So right now, I want to show you an example that would be easy to understand what I'm talking about. Actually, what is the operation cash flows from what the cash comes in from investment and financial. So here is the simple example number one. Like the cash flow, the operation cash flow here is. You remember, as I told you, the cash which comes from the sales, from the main activities of the company. like a sales, which is paid only in cash. We are talking only about which is all made in cash payments, or the some payments or the expenditures. Like sales, we have got $30 is plus, right? Positive. The sales is a company's revenue, right? Comes with a positive amount. Then here is comes material. That means the company have bought some materials, raw materials, and spent the cash money by the $10 comes with a negative, because this is expenses, the expenditure of the company. Next one, labor. Labor means that the company paid the salaries for the staff by the cash in the $10 and comes with a negative. And totaling the cash flows from the operations, if we do calculation, we can find that it comes with a positive figure, $10, right? Because 30 minus 10 and minus 10, you will get 10 in positive. The 30 sales of divide the materials and divide the labors. You do understand, right? This is clear. Next one, part the cash flow from the financial cash flows. For example, incoming loan. That means we have got some credit from the bank. The cash, like in the cash. So it comes in the company's accounts at the $50. Next one, loan repayment. That means like we paid some commissions, the interest by the credit by the $5. Comes with a negative because we paid the cash outflow. Cash goes out from the company, right? Next one, taxes. That we paid taxes by the $5 comes with a negative because we paid this cash out of the company. And the total cash flow from the financial part would be $40 positive, right? Because 50 of incoming loan, we minus deduct the loan repayments and taxes. Then we get the $40 from the financial cash flows. Next one, the cash flow from the investments. How we do calculation? Like purchase capital. What that means? That means we have made some investments. We have contributed our cash of $10 to the project. Or it can be like we have purchased some equipment. This is also the company's investments, right? When the company buys the equipment to generate the business, right? To generate the profits, to run the business, to generate the profits. And that means the cash goes out of the company and comes with a negative minus $10. And the total of the cash flows from the investment would be with a negative figure of $10. And after that, we have to make calculations and to find the net cash flows of the total figures, which comes with a positive figure $40. Like a 10 plus 40, which is 50 would be, and minus 10, we'll get the 40, like this, okay? I hope you do understand where do we get the total amounts of the cash flow of the company. Yeah, that's simple one, right? Right now, I want to show you the second example, which would be more complicated. And you have to remember all these transactions made by the cash only. Okay, only cash, which is already received to the company or already spent by the company. So next one here is the, I'm sorry, maybe it's not clear for you to see this slide, but this is like what did I found? This is a cash flow statement for the XYZ business for the year ending 31st of December 2010 in US dollars. For example, you can face like this cash flow statement. Cash from the operating activities, like here is we have cash received from the customers, which is sales, right? Which is comes with a positive plus, which means the cash comes into the company, 83,000 of USD. Next, cash paid to the suppliers and employees comes with a negative 56,000 of USD. That we paid money, the cash goes out, and the cash from the operations would be the balance of 27,000 of positive amount. Next one, dividends received. Dividends received, that means the companies maybe have contributed the money in maybe bought some kind of shares or another kind of project and received some dividends, is 250. Next one, interest received as well. Maybe a company have borrowed some loan for its partners and received some interest like 500 USD. Next one, interest paid. That company have taken the loan from bank and paid 500 of commissions, and it comes with a negative, right? The next one, tax paid. That if company pay tax, that cash goes out from the company, comes with a negative amount to 450. Sorry, and the total of the operating activities would be 27 minus all these and plus this would be 24,800. So we have a cash flow from operating activities which is equal to 24,800. Let's see what we have under cash flow from the investings. So we have some additions to equipment. So additions to equipment, that means we have bought some parts for our equipment and we spent cash money 2,500. Replacement of equipment, that means we have bought a new equipment. We spent the cash money 7,000. Next one, proceeds from the sale of equipment. That means we have got some earnings from the sale of equipment. That you remember under depreciation methods that sometimes we can we have some residual value of the assets that we can sell them, which is the old assets, old equipment, we can sell them. And this amount here is, which is called proceeds from the sale of equipment, 500. Cash comes into the company as like little earnings, little profits. And net cash from the investing activities is in negative figure of 9,000 of USD. Okay, next one, we have cash flow from the financing activities. Proceeds from the capital contributed. What that means? That means we have invested the money, contributed the money, and received already some earnings by the 3,400. Then proceeds from the loan. That means we are like proceeds from the loan. Sorry, this is all about that finance. If it's by the under financing activities, that means we have got some loans, maybe from the bank by the cash of the 16,000. Next one, payment of loan. That we made some maybe commissions, paid the commissions on the loans by the 5,400. The cash goes out of the company and comes with a negative figure, right? Which is the 5,400. And the net cash flow from the financial activities comes with a positive figure, which is 13,000 of USD. Right now, we have three kind of amounts from the three parts of activities we have done by the cash flow, like 27,000. Sorry, 24. I'm sorry, just I wanna. Like a 24,800. Here is. I wanna highlight you to show you clearly. Just give me a second. So from operating costs, we have a 24,800. From the investing activities, we have a 9,000 in negative, right? And from the financial activities, we have a 13,000 of the cash in positive amount. Like this. I just want to highlight that the greens must be, all this must be now added together. And as well, here it says that the total of the net cash flows would be 28,800, right? Of the from all the three kinds of cash flows. And as well, we have some cash at the beginning of the period. Any company might have, which is already exists, might have the cash at the beginning of the period. It might be in the negative figure as well, could be in positive figure. Here is in the positive comes with a 2,430. And at the total amount, we have all our cash flows at the end of the year in the values of the 31,230 of USD. Sorry, I talk a lot and sometimes. Yeah. So here is cash flow, another example, right? You do understand what we do include under each of part of the cash flows, which is operating, investing, and financial. So that's what I want to show you. And you might do understand that in the cash flow statement, amounts can be in the positive figure and the negative figure. Positive figure means which the cash comes into the company. If it with a negative figure, that means the company made some expenses and spend the cash money, and those cash goes out from the company, right? So that's all for the cash flow statement. And right now you have a homework assignment number 7 on the cash flow statement. So as well, earlier you have assignment number 6, right? At the depreciation again. So let me explain you this assignment. I hope you are all here and not boring. The class is not boring. So the company ABC created at the beginning of 2007. So the startup company at the year of 2007. And had at the beginning of the 2008 a working capital composed exclusively by the cash. So that means the company ABC had a capital in the cash only. The cash account had a balance of 4,000 euro at the beginning of the year, right? This is very important. You must highlight it. During 2008, the operation of the company had been followed. Now here comes assignments, the transactions which you must interpret and reflect in your cash flow statement. First one, the services rendered during the year amount of 600 euro received in cash. So that means we have received the cash, which is positive amount 600, right? Which is the sales. The personal expenses and other operating expenses of 400 have been paid in the case during the year. So we have some expenses, which is personal and operating, by the 400 euro, which comes with a negative figure, right? If it's expenses, that means the cash money goes out from the company. Next one, the fixed asset depreciation expense for the year amounts 110. So we made some depreciation expenses. If it's depreciation expense amount in the 110 euro, that means that comes with a negative figure in the cash flow statement, right? Next one. The 1st of October, the company obtained a long-term loan of 4,000 euro from the Chase Manhattan Bank, which will be paid back at the end of 2012. And the annual interest rate is 3% on the total amount payable at the beginning of each quarter. So, first of all, the company have got the loans by the 4,000 euro. That means that this cash comes into the company and comes with a positive figure, 4,000 euro. But it will be paid in the 2012, so that you won't be confused. You won't would be mentioned when it would be paid, because in 2012 in the future is so. We are preparing the cash flow statement for this year, for 2008 only. So you must consider about the interest rate by which would be paid by the 3%. So you must to make calculation and find how much interest rate by the 3% the company is paid in 2008. And as well, this amounts will be paid quarterly. You see, this is very important. Next one, at the end of the year, the company has bought new fixed assets, which is the cost of 12,000 euro. So the company have bought, that means spent money. Cash flow goes out from the company by the 12,000. And if it's bought the fixed assets, like very expensive, it seems as it comes under cash flow, under investments cash flow, right? Because we have made investment in our assets. By very interesting things, that is 8,000 paid in the cash, and other 4,000 will be paid in 24 months. So consider about that the 8,000 paid already in the cash. Next one, the tax rate is 30%. So you have to find and make calculation of the tax rate by the 30%. From which amount you have to take the tax rate to make the calculation? You remember, you have to know it, that I was explained the previous topics, that the tax rate would be calculated from the income after tax, before the taxes, right? So here is required, you have to prepare the cash flow statement for the year 2008. So this is very important. So we do prepare the cash flows, all of these kind of transactions, which is made only in the 2008, the year of 2008. What is done previously or in the future, we won't be clear about that one. So this is the assignment. I know it seems like complicated, but I would like to ask you to try to solve this assignment. And at the next class, we would have a discussion with the right solutions. Okay? Okay, I have questions about the taxes. The tax rate is 30, of course, of the year by the end of the 2008. that we are going to pay. So you must think from which amount you should take this tax rate, because after all made this transaction you would apply on your cash flow statement, then you will get your the amounts which will be left as maybe as a positive cash flows. You would calculate this tax rate from that amount. As well, you can find search in the internet all the information concerns about the cash flow statement, and you can find some analysis samples or examples that will help you to solve this assignment. You try to solve it. If you would be mistake that you won't worry, because I know this assignment is complicated. The new topic, and but I would just try to ask you to try to have your calculations, to try to make your calculations, even if you would you would calculate the taxes or the interest rates. But the most important for me that you apply all these amounts in the correct position. I mean, in the correct side of the cash flow statement, which comes under cash flow of the investments or the operations or the financials. Okay, this is important for me as well. That where you do put these figures, where do you reflect these figures in the cash flow statement, and which part of the cash flows activities. That is what is important for me. Okay, so that's all for the cash flow statement for today. At the next class, we would have some practical exercise based on our homework assignments, and as well as a new little topic on the financial management, which is called account for limited companies. So that's all for today. Thank you for your attention. Any questions, just email me. I'm trying to reply you quickly as I can by the email, but sorry if I'm really late sometimes, because I have a lot of work to do as well. I have a lot of emails from the students, so sometimes not enough time for me. But which is the urgent questions, just like put in your topic that is the urgent question, like if you do some calculations. I would open that email as soon as possible. So, what about the last assignment? The last assignment, I haven't checked it, because you have still time by the next Friday that you can send me your papers with your solutions, right? Because you remember I was giving you 2 weeks to make solutions on the assignment number 6. So by the next Fridays, we'll try to see them and to identify if we have some most commonly mistakes of the assignments itself, actually. So next class will be based on practical exercises mostly, which is discussion under homework assignments number 6, where is about depreciation methods, income statement, balance sheet, and this homework assignment number 7 under cash flow statement. Okay, this classes would be very important for you, because we would try to solve together the assignments itself. So thanks a lot. Have a good time. You have all these 2 kinds of topics by today's The financial structure of the class would send you later, so that you will be in progress to see how far we are going by the topics. Okay. So that's all. Thank you very much. Any question, email me. If it's really urgent, by the assignment, just put on the topic that is the urgent question. Thank you and goodbye.